Okay guys, warm welcome to one and all. What I'm going to be looking at today is the answers hub inside the Scruffy Squad Discord. Now, if you haven't seen the Discord, it's where we all get together and it's where everything I do is placed. Now, if I flick this over, we'll see we're looking at Faith's question. It's where we're up to at this moment in time. He's been through the videos, gets an understanding of it, but he doesn't understand the advantage of swap. And could I give an example? I certainly can. Now, first of all, let's have a look and see what it is that he's talking about to start with. Now, when I pull up a sheet like this, I make this every day and I work the strengths out myself. Now, there's many ways you can find the strengths. You can find it from FinViz, investing.com, etc. I just prefer to do it myself, but it's my own interpretation of the market. And it cannot really be replicated because it's just what I see, and we all see different things. Now, what it does do, because it does have a massive engine sitting behind it that works everything out, it can kind of try and figure out if there's any form of a sentiment change on the horizon. Now, if we're looking at this section, which is the bit that we're looking at, you can see pound US, the anchor is the hour. It's a good chart to look at. It's a good chart to look at today, and it's saying swap. What that means is the market has been in a singular motion, but it's coming to the end. Now, if we look at this, we can kind of see what's going on. The strongest gain at the moment is the US, and it's moved up 3 points. And the pound, although it is low, is actually starting to gain ground. It's not negative anymore. It's moving up. So whatever pressure was pushing it down is coming to its end. Now, it is still relatively weak, but it is catching up to the US. Okay, so this is kind of a way to read it, if you like. So in the short term, it probably is going to be pushing down, but it hasn't got much more to go. And what will happen is there'll be a change in sentiment, a swap. So let me just pull in an account and I'll have a look at it. So if we look at this, just take the indicators off for now. We don't need any of the indicators. And I'll just widen this up just so we can see it. Now, if I pull this out to the hour, which is the anchor chart that I'm looking at, what it's telling me is this has been on a merry run, and you can see it. There's no doubt that that is a downward motion. But look where it's at in the chart. It's come down and it's hit a bottom point of the market, which is here. So if I was to say draw levels under this, and I put my levels back on, we can see it's now come into a trading arena here. So this trading arena, drop a little rectangle on to highlight what that is. It's kind of a stop zone. Now what that means is the price is stalling in and around here. So if it gets through here, I'll be looking for a change of sentiment around the next few levels. So it can be here, it can be here. But if I look at the structure of the market, well, it's actually found a bottom, which is there. The next bottom is this section. And then we come through and the next one is down here. So what does that tell me? Well, I'm a Fibonacci trader. I know the markets react to fibs. So if I drew in a market retracement, what I'd be waiting for is the market now to show its hand. And this danger zone or area of attraction can now make this a watch list, drop that up to there, and I can do one of two things. I can go, right, okay, I think it's over. If it breaks that yellow line, I'll put my stop under this one and I'll trade it into that blue line. But if it breaks the blue line, which is the 23, a key trigger point, I will then trade all the way up into the 50 which is a pivot point. So if I put that up here, drop that there, that's a pivot point. Again, that pivot, in other words, this move, the 50 is reinforced by finding absolute structure, actually where the pip. So that's it. So I can now trade from that point to that point based on a swap change in sentiment. In other words, it's a downward motion, but it's kind of at the end of its life. So therefore, there's going to be either a quick bounce before it resumes its direction, or it's going to be a full-on reversal. That's the definition of the swap. It's just telling you that whatever you're doing, this is changing. This hourly chart is about to change. Now, there is another way of doing this as well, and that is, okay, I have this in motion. I can see where the low is. As long as that low is not broken, I know the price is moving up. But if I think the overall dominance is still to the sell side, instead of buying into these, I would use the 23 as a first stage sell, because the sentiment has changed and it means that I'm going to have to wait in order to get in. So I'll be selling here, here, and here. And if it breaks through this line, because that's the next major support and resistance line, there's a good chance that this is now on its journey back to where it came from, because it's broken through the pivot. And if it's on an upward move, that means it's going to have to come up to here. And then if it breaks through that, it's going to look for the next ones, which is here. And that ties in with the 127, which is the next returning point. And you just build your chart up like so. And if it goes up to 161, which is up here, just put that in just so you can see it, which is the major stretch point. And we start pushing back into the market to see where it was last. Shockety shock shocks. It's bang on the last cluster. So if that's the case, this is a major point that it'll start looking for. Its stall point will be there. And then if it breaks through that, it's coming into these levels. You'll be a trap trader and you're stuck. So that's why your sort of management of the trade, I don't call it risk management. I think that's a terrible way of looking at things. It's investment. So my investment would be from this point to that point, get in, get out, be quick. If I want to sell it, I'll be selling here, but I won't allow it to go much past this point because it's got way too far to go to the top and I'll be stuck. So it's all different elements of how you look at it. But if I know a change on the horizon is coming in the short term, in other words, the hourly, I can then make a decision to buy scalp into it. Brilliant. Or I can use these for the continuation, knowing that this change is in process. That's my definition of a swap. So I kind of hope that helps. Do keep them coming. I'll answer them the best I can. Sometimes I might just point you to a video in where the scruff, but a lot of the time I'll kind of explain it best I can. Hope that helps. And as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. You all in the next one.